Good day, traders. Welcome to another edition of Wednesday Live. I believe we are doing good. I want us to take a look at some setup for today, starting from DXY. All right, so what's my opinion about DXY? Of course, whatever is happening in DXY is going to shape what will happen in the market. So right from time, we've been bullish, as you can see from our weekly time frame. The strength is still there. It's still very, very evident on DXY. First, I've showed you this corrective structure for quite some times, that the move you have here, you have here to break this top. That's on the weekly time frame. Okay, on the weekly time frame. But does markets go in a straight line? No. So we're anticipating to see a bigger corrective structure here. Okay, a bigger corrective structure here. We have a push to the upside, but right now it's still very bullish on the weekly time frame. On the daily time frame, the corrective structure we're expecting at this juncture, this side, should look like something bigger, like this, but it did not give us a bigger correction. Even when we're expecting it to go down from here, it went up and confused everybody in the process. Okay, confuse everybody in the process. But right now, what are we expecting? If the bullish rally to the upside is to continue, then we want, for us to get involved, we want a pullback to at least to this demand level. We want a pullback to this level. Okay, want a pullback to this level. Don't know whether it will come in 3 waves or whatever structure it will take, but it has to be a pullback to that level. And you can see that at that level, you see reaction here before the market took off to the upside and never looked back. So we'll be happy to see a correction. First, see that you already have an impulse, impulsive leg from the correction. You are beginning to develop a 3-wave structure. You want a move down. Okay, and here, if you can give us an ending structure, here an ending structure, we'll be happy to take it back to the upside. Okay, most likely it will be better if it gets into this zone, this demand zone. Be very good if you can get there. So that's DXY, AUD, USD. Okay, whatever analysis I have here, I love to delete them so that you can understand the process that that inform my opinion of whatever bias I have in the market. See, go to weekly time frame. I see what we are seeing here. There's a lot of sell pressure right here. I see a lot of sell pressure. So based on this, we cannot definitely look for upside. We can't look for upside here. It's downside we're anticipating. So what I do is simple. I just look at the psychological level at the middle of this structure. So I just mark it. That's what I do. Just mark it, go to daily. So when you go to daily, you now see that there is a clear supply here. There's a clear supply here. After this dodgy, what you see a massive push down. That means that there is a price there that the market was supplied, at that level. And if you take a fib again from this top here, because here has broken the structure. You can see that we are exactly at 61.8. Can you see? 61.8. So what I do is to adjust, just adjust my levels. This is 61.8. So I want on a daily time frame, I want this market to come over here. If it doesn't come over here, I'm not going to get involved. You understand now? I'm not going to get involved. When it gets here, whether it's bullish or it's corrective or it's impulsive, I don't want to know. All I know is that let it come over here. And as soon as it gets here, what do? I can go to 15 minutes or 5 minutes or 30 minutes time frame and see what I call trend development. There you will see that, this daily will be coming in form of trend too. Form of trend too, in form of trend. When it gets here, you will see a break of structure. Can you see? You see a break of structure, correction, and downside. That is trend development. Okay, this thing you will see it right here, right here. You see it right here. You see it right here. Okay, that's trend development. That you're going to see on a lower time frame. You're not going to see that on a daily. You're not going to see that on 4 hours time frame. You are going to see it on a lower time frame, guys. Okay, on a lower time frame. That's it for AUD NZD, AUD USD. From here, we move to the downside. Okay, next pair, Euro dollar. Okay, Euro dollar on a weekly time frame. See, the move is gone. That's gone down massively, but we are still bearish. See, if you plug your trend line right here, we are still very bearish on Euro dollar. Then you see here, right here, this move to the downside. You see, because of the reaction here, I can take this as an impulse. Okay, and with that impulse, if I take a fib from this level to this level, I want to mark 61.8, and my 61.8 correspond with what? The supply level. Can you see? Supply level. Okay. Can you see there's a reaction here and there's a flush down? Okay, that's where we identify our supply. So you can see the wedge has broken down. Okay, so what I want to see right now is simple. I want to see that this market gravitates towards this level. If it doesn't come towards this level on a daily time frame, I won't get involved. And when it gets to that level, what will I be looking for? That's my supply. Go back to lower time frame and see trend development, rejection and trend development. From that level, correction, you get it for the downside. Okay, where's your target? You'll be using daily as your target. You'll be using a smaller time frame like 15 minutes, like 30 minutes for your entry. See, so that's how to go about this. Euro GBP, I just call off a trade in my signal channel on the Euro GBP, not because I am not convinced of the move to the downside, but I am not interested in the retracement that I saw. Okay, I don't want to participate in that retracement. See, daily time frame right here, we have seen that this pair is moving down. We're anticipating weakness in euro. As you can see, we're having a bullish setup for GBP, JPY. Okay, and right here at the top of this move, this retracement is right here at 61.8, and right there at 61.8, we are seeing engulfing candlestick pattern daily time frame, which is a further confirmation of impending move to the downside. So if that's the case, guys, what do I do? I want to look at along this level. Do I have any psychological level? Yes, I have 0.8450. Okay, so I want to just mark this level down. 0.8450. I cannot sell at the level it is. Go to my 15 minutes or 30 minutes time frame. I want to see a pullback to that zone, guys. Can you see that we are having confirmation of a pullback to that zone because you are seeing an ending structure right here. That was why I call off my trade, my signal channel, after just 20 pips to the downside. Can you see? You have a higher low right here on the indicator. You have a lower low right here on the price, which is what we call a divergence. Okay, so because we have spotted a divergence, then I know a move to the upside is imminent, and that move to the upside is not a pullback. It's not going to be a reversal. It's merely going to be a pullback. So if we have to narrate how the move should be schematically, we should expect something like this, something like this. When they get here, we look at how the trend develop right here, get here, we get it. Once we get it this way, we get it. We know that we are moving in with a move to the downside. But this corrective structure will have to complete first. You can see how we approach the analysis from daily time frame to spot a sell pressure and then getting back to smaller time frame. And if this trend development, guys, does not happen here at this structural level, and this market keep trending, keep trending, keep trending, keep trending, keep trending, keep trending until you break this top, fine. The higher it goes, the better for you. It means that this structure that we are thinking was over is actually developing 1, 2, and 3 to the upside. Okay, 1, 2, and 3. 1, 2, and 3, which is WXY, guys. So if this get to the top, right to the top here, and invalidate this trend line, then it has just provided what is called a trend line liquidity. All right, that would be a trend line liquidity. And at this level, we'll be looking for, trend development, boom, correction, boom, we get in here for a sell to the downside. So the idea of waiting for price at the right structural area before you even look for corrective structure is the best idea ever, But because of at times we are in a hurry to get into a trade, we don't wait for some of this confirmation. Even myself that is teaching you, sometimes I don't want to wait for that confirmation, and I'm beginning to see that maybe probably overconfidence or something like that. So I cannot create a rule and bend that rule. So sometimes I call off my trade because it just dawned on me that I've not followed my rule. So if I should lose this trade because I didn't follow my rule, it will be the most painful thing to happen. Do you understand? As I will show you what's going on right now in GBP, JPY, that I've also called off. Even in loss, I had to call it off because it does not follow my rule. All right. So right now, I have to clear this analysis, daily time frame. You see, we are in a downtrend for GBP, JPY, but right here, nobody in his right senses will sell at this level. Nobody in his right senses will sell at this level. We need some measure of pullback. Just as I told you when it was here, when some people were selling here, I said nobody will sell here. It has to pull up. Now it makes structural sense. It's pulling down. Nobody will sell here. It has to pull up before it will come down again. Is that okay now, guys? So that's daily, no setup right here on the daily. Even on the 4 hours, no setup. All you can do is to identify the fib level and the supply level, guys. Okay. Supply level right here. There's a reaction here and it flows down. That's my supply level. And then fib level for this move to the downside. Do you notice that my supply level is matching the right fib level of 61.8? Yes. So what I would like to see is this market coming up to this level, to that supply level. I want it to just come right here correctively. Then when the pair gets to this level, I'm going to look for a trend, a change of character. Okay, impulse, correction, and getting to the downside. Okay, that is a pound dollar, GBP, JPY. Okay, on the daily time frame, see, let me clear some of this stuff. The daily time frame, guys, you see that this pair is consolidating right here. You see this one right here. But along the line, you can see a very good engulfing candlestick pattern right here. Can you see engulfing candlestick pattern right here? So what I want to do is to look at the right fib level for this engulfing candlestick pattern, and I've identified 61. Identify 61 as the right level for it. Okay, 61, 61, 61, 161 rather. Okay, so right now the market is there. It's right there at 161. So I want to see trend development. I had earlier given the trade at exactly 161, but I have to call up that trade because it doesn't meet my entry criteria. Okay, I have to call it off with apology to my members of our Signal channel. So right now, I told you, you have to see trend development, how trend develop, okay, as it approached that level, and moving out of that level is very important. As it has come here, guys, it must go and break structure. This move to the upside is compulsory because that is what will confirm to us that all this is a corrective structure that is meant to break to the upside. So when you see the first impulse here, guys, you're going to wait for corrective structure. The market is going nowhere to give us corrective structure. Here, 50% is okay here, guys. 50% is okay. Get in, put our stop loss below, and then you have a move to the upside. Where are we targeting, guys? Do you see? Do you notice that you have a trend line right here? Okay, just note that if this setup is accurate, then be sure that it's not going to stop exactly at that trend line. No. It's going to break that trend line to the upside. This is what is called a buy side, a sell side liquidity. It has to take this liquidity, tap supply right here, guys. Tap supply right here before coming down to the downside. Is that okay now? That's GBP, JPY. Okay, Euro GBP, weekly time frame. Let's delete some. I don't want to get involved in this trade because it's more or less to the downside. Okay, to the downside, of course, you know, Euro GBP has a sell bias, so anything Euro will be weakened for the moment. All right, so I don't want to get involved for Euro GBP. Okay, the only thing that can make me to be involved is if I can get a pullback right here and sell. That this pullback is late. at this level. USD JPY, of course, in daily time frame, you can see that you see a clear intention to move to the downside, but you see a clear rejection. So this is, I don't want to trade this kind of setup that you have engulfing candlestick pattern that come with a rejection. I want a rejection in the bullish structure, not in the bearish. Okay, I don't want to see a wick here. I want to see a sell pressure to the downside. So if there is a massive sell pressure to the downside, there is not supposed to be demand at this level that will move the market to the upside. It's too early. So that is why I'm not looking for sell opportunity for USD JPY, even though structurally you might have this move to the upside to this level, and when it gets here, we look for trend development. Okay, trend development to the downside. It may not break more than this level to just make 1, 2, and 3 corrective structure and develop a move to the upside, just as we analyze in DXY. Okay. All right. Next, USD card. Okay, I think we should be getting ready to trade USD card, because right here on the daily time frame, guys, right here on the daily time frame, you see a massive sell to the downside. I've told you what I do is I just look for psychological level in between the profit candlestick, that's 1.300. Okay, I want this another daily candle to come back to that level. Okay, I want it to come back to that level, and then what will I do with it when it comes back to that level, guys? What I will do with it is simple. I want to see this corrective structure come like this. Okay, come like this, correction, and this. Okay, once it gets to this level, I want to see a commitment from the side of the price that is about to move to the downside. By giving me this, I look for corrective structure, then this, the same process every time. This is what I want, and that is why you find out that most of the time, because of the stringent rule involved, you've got to have to wait, wait for several times before you see setup. In a whole week, you may not see more than 1 or 2 or 3 setup in the market. Okay now, because of the rules that you have to follow. Is that okay now? Okay. So that is USD card. And AUD USD. Okay. All this you are seeing here, all we want to do is a massive move to the downside. You know, when you see a pair like this, you want to consider liquidity into it. You know, for this pair can sell very well, there's need for you to tap liquidity, and that liquidity will come by this pair breaking to the upside slightly, breaking to the upside, breaking this top. Can you see? Breaking this top. Many people will see, that the pair is bullish, and they will start buying. But all of a sudden, you see that when you move up like that, it will have done 61.8% of the previous bearish move. And then all you need to do now is look for impulse here, corrective structure here, and then move to the downside. This is called market structure. Okay, so I've told you several times that, guys, market structure is beyond higher high, higher low, lower high, lower low. You read the market. For instance, when this market develops this structure, the first thing that should come to your mind, is this look like an ending structure? You have to check divergence. Okay, you have to check divergence. Can you see? So this will tell us, this already made us to know that this move to the downside is going to come. So there's divergence. But once this top is not taking, you see that this move to the downside is mere a pullback. It's mere a pullback for the trend to resume, because this top is not taking. So this makes no structural sense by coming down this way. So look at it here too. You have to move to the upside. Let the market commit to us that it's about to sell. Let it pull down. Corrective structure, we sell. Can you see? So it's as simple as that. Euro AUD. To trade this pair, we want to pull back to the upside, and it's at the lower side of the structure. But right now, there is no opportunity. Okay, the only opportunity I see in the market right now, as far as this is concerned, is simple. You look at here, you are beginning to see what look like an ending structure here, down. In this lower time frame, if you see a break of internal break of structure, just look for corrective structure and buy, because right here we need a pullback, and this look like a zigzag. Okay, a zigzag that come to the previous low here. Okay, so it will be a nice opportunity to have this ending structure develop here. Then you have a break to the upside, let it correct, to this level, and take a buy to the upside. Is that okay now? As CHF, I've given in my signal channel, I give this trade right here at 0.73885 or 84. But I had to call it off for just a reason, with small profit. I was expecting this structure to break down to this level here, before we look for impulse, correction, and boom. All right, but we close our trade in small profit, but it did not do what we wanted it to do. That's market for you. All at a sudden, the next day we saw it boom to the upside. Right now, it has made about 1 to 3 risks to reward, but all hope is not lost, guys. We are still going to get entry on this particular market if we have a decent corrective structure here. Okay, that correct these 3 waves move to the upside. Remember, I told you that you can also have 3 waves as an impulse. So in this scenario, these 3 waves is serving as an impulse. If we take a fee, because it's the one that breaks this market structure, okay, that's why it's an impulse. And if we take a fee from this level to this level, then usually waiting for what we call it 50% is usually enough for this kind of retracement. 50% here. Okay, once it's 3 wave structure, I always want it to be a 50% retracement. Okay, so once it gets here, guys, what do I like to do? I want to see a move, correction, and a move to the downside. Is that okay now, guys? All right, so that's what we'll be expecting from CAD CHF, because we have to, this is the ultimate target of CAD CHF. 75.50 to 76 is the ultimate target of CAD CHF. And of course, you see what's happening here? Right here, you have 3 waves up. Right here, you have 3 waves down. You see the waves in the middle. See the waves here, 3 waves down. Then what are you expecting here, guys? You're expecting either a 3 waves up or a 5 waves up. But as I'm seeing it, it's going to be a WXY structure to the upside. Why do I say WXY structure? We already have 1, 2, and 3. We're expecting 1, 2, and 3. We'll do 1, 2, and 3. Can you see? This is the roadmap to the target, and it has given us that roadmap because instead of it to start in a fine 5 wave impulse, it started with a 3 wave impulse. So the move to the upside for CHF is going to be very slow. It's going to be very, very slow, guys. That's why anytime you have this kind of structure and an impulse is being replaced by a 3-wave impulse instead of a 5-wave impulse, that move to the upside will be very slow. Okay, because we have 3 waves here, now begin to have another push to the upside. CHF, guys, you know, I told you I sent this markup to the general group, and I said anytime you have a structure like this, you have this, you see 1, 2, and 3, you have this, and probably let's say the resistance is here, the supply is here. Okay, so when you get here, just below the what do you call it, just below the supply, you're now having a consolidation. Okay, the way to read this market is that you're going to have a break up to the upside, tap liquidity from supply, because others are residing here, and some people who are not knowledgeable in chart analysis, they are going to start buying this to the upside. Do not buy this. You are not supposed to buy this. This is a setup that will be used to fake out many traders. They will buy this, and as soon as they get here, they will be jubilating that they are making profit. But all at a sudden, you are going to see a move to the downside. After that move to the downside, you now look for corrective structure before you now just sell. Okay, this is how you approach this kind of a setup, and you see it's a perfect setup. You know, you have 3 waves here, 3 wave correction, and a push up. And if you take a few extension of this wave right here, from here to this place and to this place, you see that the top here is right at 1.0. That's 100% extension of wave A, and that corresponds with our supply level, guys. If you don't want to be conservative in your entry, when you get to this level, once it gives you rejection, you can get in at maybe exactly 106.50. Get in, but to flush down. But I don't normally do that. I want you to flush down first, look for corrective structure before I sell, because we have a long way to go. So why would I be rushing here? That was why I closed my trade on GBP-JPY. We have a long way to go. So why should I have to take a risky entry? Even though I had to take a 25 pips loss, doesn't mean anything. Well, when the opportunity to catch is there, we'll catch. Okay? CHF, JPY. Can see what I told you the other time concerning this kind of structure. See, right here, we are supply. Okay, right here, we are supply. What we see here, you see corrective structure very close to supply. So all you need to do is to catch liquidity as supply. What does it do next? Come down, corrective structure, go down, and on and on and on like that. That's the structure. Okay, there are people that trade only this structure. They don't see this structure, they don't trade. They don't trade. You understand? And it happens every time. Can you see? Corrective structure, break up to the supply, come down, corrective structure, down. That is a pattern. Okay, that's a pattern, well-established pattern in the market. Okay, good. Good, it's coming down, but I want to sell, but not at that level, guys. Not at that level. Certainly not at that level. Not interested at that level. So right now, look at weekly, you see it very clearly. Can you see it? What did I tell you? Just mark psychological level right here. I would like to choose one at the middle, 1770. So, okay. So, we want a discount back to this level. So, I go to 30 minutes time frame. And I see how structures are being developed, you know, to gravitate towards that supply. Okay. So, you could sell down from here, but I don't like to sell at that level. So I like to go 3 waves up right here, 3 waves up. I want to see 3 waves down, and then 3 waves up. By the time it does the final 3 waves up, well, I've gotten to our supply zone. And when you get to our supply zone, we have to see transition from bullish to what? To bearish structure before we join the sell. So that's how you look at the market. AUD this pair is still very plain, still plain. I want to see this as a consolidation, okay, before supply. See, I don't want to get involved because I can see equal top here, and above it lies liquidity. Okay, so what I want to see right now is for this market to break to the upside, tap liquidity from supply, come down, corrective structure, go down. That's what I want to see. So you can see how we are combining structure with ELLIOTT theory and with liquidity. See how we are putting all together. You know, we are considering all in our analysis. Okay, look at it. I cannot get involved in a sell like this. Okay, if you don't trade liquidity, if you don't consider liquidity with your analysis, you are going to be selling, and it doesn't follow. You see this line, the liquidity on top. Once you catch that liquidity, okay, come down, corrective structure, go down. It's as simple as that, guys. US oil. See why I had the bias for sell of CAT CHF, because US oil is at the right level, that I expect it to sell to the downside. Okay, it's at the right level, I expect it to sell to the downside. And of course, you see that there is no divergence. Right here, you have lower low. You expect a higher low from the indicator, but you are getting a lower low. What does it tell you, guys? It tells you that there is no divergence, rather there is convergence. And for that reason, and to that extent, this move to the upside is considered as a pullback. Okay, it's considered as what? As a pullback. So what I want to see now is let it get to this level, see an impulse, then the correction is a move downside. Is that okay, guys? We have been in the buy of GBP AUD in my signal channel. Okay, right there. I want to see this market. You know, I told you right when we were here that we are going to have a move to the downside. Every forecast has been perfect. We took this buy. After this impulse correction, we took this buy. We close here. We give us this correction. We move to the upside. And I told you that it cannot conveniently move to the upside except it break this equal low. Liquidity resides in this equal low. You have to trade with liquidity, guys. You have to analyze liquidity with your structure, okay? That this market will have to come here, but I'm not going to get involved in the sell. Let it come and break it. Can you see? It has come and taken out this liquidity. And then it gave me impulse. And I told you that if we give you impulse, and this impulse does not correct to the right field level, allow it to go. Treat everything here as an impulse. And then look for correction back to 61.8. But this time around, the correction is sharp, and it has decided to come to 78. Okay, so why I don't want to close my trade? Because this has come to the right field level to make a move to the upside. Look at the impulse here. Take the fib of the impulse here. The market is right at 78% retracement. So, and if I'm seeing a consolidation at 78% retracement, what it just means to me is that the market is accumulating orders. Okay, the market is accumulating orders. That is why even with the drawdown, I'm still very much interested in the trade. So what we are going to be doing right now is, if the market breaks out here, impulsively, we just look for corrective structure and then add another position to the upside. Okay, we add another position to the upside. And then where is our target? That is the issue. You know, we have one position here. We add another position right here, because it is in the signal channel, we are treating this trade as a swing trade. Okay, we are treating it as a swing trade, guys. So because where is our target? Where are we looking out for exit? We are looking forward for this trade to break this top. See liquidity here again. Can you see your liquidity here again? So we're expecting this trade to come to break this top. Okay, as far as this level. So I'm treating it as a swing trade, my signal channel. We hold those two positions. You know, we have one position now. Once we have a break to the upside, when we have a clean corrective structure, we take another buy and target the top of this trend line. Okay, we have been projecting 84. May not get to 84, but at least 80 is fine. 80 is fine. All right, so that's it about GBP AUD, guys. GBP AUD. All right, so let's look at US 30. US 30 made a cracking move to the downside last week, and I enjoyed the ride in one of my accounts. I actually forgot to close it, and when I came 3-4 days later, I had seen it move massively to the downside. If you look at weekly time frame, you can see this structure. When you see, anytime you see bullish, anytime you see a bullish candle followed by a dodgy or indecision candle, and then you see a move down, this is a pattern for what? For more sell to the downside. But right now, I don't really have any setup for it, because you know I trade the daily time frame, and with this daily time frame, guys, I've not seen a clear structure. I would like to see, if possible, I'd like to see like a pullback here and an engulfing here. Okay, if I see a pullback here and an engulfing here, then we can look for sell opportunity to the downside. But for now, I've not seen maybe selling, but I don't see how I will get my entry for US 30. All right. So any question, guys? Any question, guys? Do we have any question? I will close the session if you don't have question. Do you have any question? Mr. Said, did you close part of your profit yesterday?
Good afternoon, sir.
Yes, sir. Good afternoon. Were you able to close part of your profit yesterday?
Yes, sir. Thank you so much, sir.
All right.
Yes, sir.
Honestly, mine was running in profit of about 10K, but I was resting when I checked when I came back to my desk, all had hit breaking. So 10K came back to breaking yesterday. It was serious. It was serious.
Hello, sir. Hello, sir. Good afternoon.
Yeah.
Okay, please, I would like you to analyze AUD card for me, please, sir.
I've touched on AUD card, except if you were not in the house on time. Touch on AUD card. I made it clear that this is what I would like to see. That right here, if it's selling at this present level, I'm not going to get involved, because there is certainly no element of liquidity in the process. There are a lot of supply on this area. So I would like this pair to come up to tap liquidity and supply. And after that, let it come down. That first impulse is a confirmation that all the work you have done here are correct. So when you see that impulse, corrective structure of that impulse to the middle, take your trade to the downside. That is when you are safe. But right now you are not safe because you need liquidity to be grabbed. And if the market does not grab liquidity, it's not going to give you what you want, guys. It's not going to give you what you want. There is need for liquidity to be taken. When you are taking your entry, always ask, has liquidity been taken? If yes, you now look for impulse, correction, and get it. But if liquidity has not been taken, let's say here, right here, guys, you now have impulse here. Don't deceive yourself. Any impulse you see here, there is tendency for you to come back to the upside. These were things we were never exposed to when we started trading. We did not understand all this. So when the thing just break here, they say sell the breakout. You are selling the breakout, just sell a little. Has it happened to some of you like that before? Just sell a little, just come back to the upside. So the reason why it has to be like that is that there was no enough order for it to continue to sell from this level. No order or liquidity was not there, no enough volume. So you need to go up, okay, take liquidity from here before it will come down. You now see it will just grab it and flows down immediately. Flows down immediately. So it is the corrective structure of that flows down. That is your trade. You understand? That is a USD card. Somebody say BTC, there's nothing BTC right now. BTC had made it move, and now BTC is correcting. So allow it
Thank
to
you very
correct
much, sir.
for more
Thank you.
downside. All right, thank you. Okay, another question? Okay, the absence of no further questions, I'm going to end the session. Definitely, I will upload the video on YouTube. I'll try to process it. All right, so see you next time. Bye.
All right, thank you, sir.
Thank you so much, sir.